Hi, good morning, guys. So this week, we don't have live class lah. But I'll prepare this video for you. This is a very basic video that we continue from the live class last week. Everything we start from very basic lah, because that is the most important. As long as you add more things into the basic, then you start to confuse lah. Yeah, even though for long time trader or trader, they always get confused when you add more indicator or whatever drawing that they add into the chart. So market move is very simple. Yeah, we have to understand market phase that we already go through. Yeah, market phase. Then to go through a structure in the phase, how the market phase is being formed. Yeah. Okay. So now previously we have to go through a multi-time frame. Multi-time frame, that means we use a different time period for us to study the chart. So best we always start with daily lah. Daily, and then we can go down to H4. H4, that means 4 hours time frame. That means one candle is 4 hours. Okay, and then we go down to 1 hour. This is the structure and the phase that we use to study the market movement, mainly on these 3 time frame before we go into a lower time frame that you start to get confused if you don't understand the bigger time frame movement and structure. Okay, so today class we focus at market phase and market structure. Yeah, go through the candlestick basic, that is more than sufficient. The 3 pattern of candlestick, and also the trading session that you go through, the important trading session, what time usually market move, Asia, London and New York. Okay, so now we get into the class. We go start from daily phase. So what we want to understand from the chart is we want to see a daily. What we want to understand, what is daily doing. This is very simple for all trader, that this happen all the time lah. But still many traders suffer from this. Yeah, if we see that in the daily time frame, when you open the chart and you see daily time frame, then you see this structure, that means it's in a bullish phase. Yeah, it's very simple lah. We see this one, then we just, like for example, we just write down where is the push happen, very simple lah. And then this one is the sell retracement, and then it break. It's very simple. We just draw like this when you go to daily time frame. Okay, you just draw like this in a candlestick lah. You see in the candlestick. Later we go into the candlestick. Now we just see the line chart. Okay, so now next, then we go down one time frame down, H4. We want to see this structure, how this structure is being formed. For example, you might see something like this one when you push up, and then same thing happen lah. Same thing happen like this. Yeah, this is the H4 lah, the movement. This is just an example lah. Example H4, and then we go down one more time frame down. So what you do in H4, you guys just draw something like this. Yeah, just draw something like this. Let's repeat the same thing for daily to H4. Yeah, and then we will go down to one more time frame down, which is H1. Why we want to draw this one? Later I will explain to you why we draw this thing, because we want to understand the thing is that how market form this daily move, because we understand that market most of the time is in sideways movement. Yeah, sideways movement like this. A lot of time I can do like this before a big move happen. So what we want to see is that where is the big move happen. For example, when you see this one and then suddenly there's a big move happen. So then we want to take note of this structure. We want to understand the structure as in that the place that the market make the big move. We want to take note of this one in the multi-time frame environment. So when you draw this one and this one, you will be able to notice that in the market how it behave. Yeah. So in different time frame, you will see the same thing repeat over and over again. But what we want to reduce our confusion is we start from higher time frame. Let's mean like this. Okay, then the final one we go down to 1 hour time frame to understand how market is formed being in the H4. Yeah, then you might see a smaller time frame like this one. Yeah, in H1. This something like this. Okay. So the big structure inside there's a small structure, and from daily to H1 you'll be able to see a different structure that happened and form the big market phase. Yeah. So okay, now we understand the concept of market movement. It's very simple when you see this one, but still a lot of traders make a lot of mistake when it comes to trading because of your emotion that already cloud your thinking. Yeah. And how do you place your trade and how do you set your SL? Everything is because of your emotion that always disturb your decision making. But as long as you start from the basic and your basic is very strong, then it should be alright, as long as you don't involve your emotion when you come to a decision making, and you don't need any indicator or any other things. You just need to understand from the price action as in how the price move in candlestick we already go through. Then if you don't understand, then you just download the old video and just go through how to read a candlestick. Okay, so now we go into the chart, how you guys study the chart. Okay, so this is, you just go to the watch list lah, then you just add whatever you want to see, like gold future, micro gold future. Okay, and you just come to here and then you set candlestick. How do you find all these things? And just go YouTube and search lah. YouTube got everything that you need. I don't need to go through here lah. Okay, so take a very simple example. We take this structure lah, this movement of daily movement, daily phase. We already understand that from here we see is a bullish phase from daily. It's very simple. Is bullish. So what we want to do is we try to get an entry point that follow the main market movement. Okay, if you go counter trend, that means now is bullish and you sell the market, that means you are looking for a counter trend. That means you are looking for a market pullback to the zone, to the structure of the market phase. So what we want to see now, we focus over the primary move. What I mean by primary move is the initial push of the market. We can split into primary and secondary move now, but we focus at primary move now first. Okay, this simple push, and we can see that this push went from here to here. We see that from daily it push over here and then it do some sideway over here. You see the candle is very small, so it do a sideway over these 2 days, then not much of activity happen, and then you make a big push up there, and then again you make a sideway push, and then it break out. Okay, that's where it reach 3,500 per ounce. Okay, so we want to understand this primary move, how it happened. Yeah, we can see that from the daily structures, daily move, we can see that the big move happened after this one. This means this one. This is the big move that we see. Yeah, it's very simple. This is where market make a big move. Yeah, then we go down to 1 hour, one time frame lower, H4. The same thing. What we want to see is how market form this bullish push from here to here. This is what we call a primary move now. How it being formed? That means there's a very big push happen in this entire move. So where are all the big move happen? We can see before. Just now I explained to you, most of the time market is in a sideway movement before a big move. So we want to see the sideway happen at where and the big move happen at where. For example, when this one push up, then we can see that there are some movement sideway here and then slowly move up and then slowly move up. Then we can see this one. You can see that over here there's a big move in H4 over this candle, and from the bottom we can see roughly there's a big move over here, and where else, and we see a big move over here. This is for H4 lah. And then where else, and then we can see that there's a big move and over here. This time we already draw the daily zone. We use a different color lah for daily zone so that you guys can understand. Okay, orange is the daily. Then H4 we use the green one. We want to draw where market sideway and then followed by a push now. This is back all the way back to the bottom. Okay, these are all the H4, and then there's a H4 here. Okay, then you might draw something over here. Just a simple drawing. Okay, it depends on how you read, how your eyes look at this H4 structure. Okay, so complete the H4, then now we go to H1 lah. Very easy for this entire move. We want to look for very obvious push lah. And then you can see most of the time H4 and H1 is quite similar lah. Yeah, the green one that we draw just now is the H4. Yeah. The lower time frame that you go down, the more noise that you will see, that very difficult for you to make a judgment already. Yeah. For example, this one it come down and then it push up, and then middle it push up and then push up. Yeah, there's a lot of zone happening now already. So you get your chart getting more messy and messy. That's where mistake comes already. H4 you already draw, then just let it be. Then H4 you already draw, then you let it be. And then this one at the early on it already push up, but it come back. The price come back already lah. What I mean is come back. And from here it goes sideways. Yeah, push up and then it come back out. Okay, it's very simple. So we just study the movement like daily to H1 just like this. It's very simple. Now then we go back to this is all the structure how market is being moved from a push and then it start to sideways. That means market seller and buyer is equals lah. Yeah, there's nothing much happen. And then another push come in. That means there's another big buyer coming into the market. This is what we call a structure area lah. Yeah, this whole movement or sideways movement is a structure area that we need to take note when market comes. When market come back. Why we want to take note when market come back is because early on this is where the place that there's a lot of buying activity happen. There's a lot of buyer come into market and buy at this price, and it push up from here to here. It's very simple. The concept is very simple. The theory is very simple. Why the price move such a big move is because of there's a lot of activity happen that push the price up. So when it come back, we need to take note of this area. But you look very simple, but when it comes to trading, you make a lot of mistake because you don't understand what you don't know yet. Now it's very simple. I just want you to go through this one, draw the structure point where market make a big push, then you can just study lah for this entire move. For example, after this I will want you guys to write down what you observe from this move. Okay, this daily move, and then we go down to, you can go to the previous history, no problem. This is just an example. That just now we draw the daily zone. Yeah, this is where market make a big push up from here. Yeah, market sideways, and then buyer comes in and then push all the way up. Okay, very simple. Then price come back. Okay, you can see price start to come back and then push again. Why it's happened like this is because everyone can see the futures market is very simple to us because every single trader see this chart the same thing. There's no different chart for futures. If you trade CFD, then the chart might be a little bit different based on the broker and based on the liquidity provider. But futures, no different. Every single one see the same thing. So what you do after you draw this one, I want you to look what happened after that. That means after you draw this daily and then market come back, and then now you see, oh, market push all the back up. Okay, so this is just an observation I want you guys to go through at the structure point that you draw. Okay, and the next one, the H4 is very simple. This one first. This is the H4 that you draw. It's very simple. Why we draw this one is because market go to sideways and then boom, push up. Okay, that's where buyer comes in. It's very simple. Okay, then what happened in the future? price come back, and boom, go up again. That's very simple. I will just want you guys to go through from daily until H1 to draw the zone and observe how market move based on this one. For example, now you draw this primary move. I call it primary move because this is the initial push all the way up. And then after the primaries move happen, there are a lot of secondary zone will be created from this primary zone. What I mean is that when the price come back to the primary zone and it start to move and react to become a secondary zone, like this one, you will form a secondary zone. The same thing happen again. We just go down to daily and see whether there's any daily zone happen. So this one is just the same thing lah. Yeah, this one they react to the initial primary move zone and push up, and then nothing much happen lah. And then we see H1, H4. Okay, just see H4 what happened after it move. Then you can see sideways, boom, this one move up. Okay, there is a move, secondary move over here. That means it react from the primary move and it make a secondary move like this one. And you can just draw lah, the same thing lah. Yeah, secondary move, but you need to take note this is a secondary zone, this is not a primary. Then market come back and then push up. Okay, I don't want to share too much in this video. This is very simple one. I want you guys to draw, and then after you draw, I want you guys to see how markets react when it come into the zone. When market, it's like this. When you draw this daily orange zone, then how market react, come back this one, like this one. I just want you guys to go through. You don't want to go any lower time frame until H1 is sufficient. H1 is already very messy, start to get messy already if you don't know how to read. Yeah, so you can go down further to the back here, no problem. Yeah, any place that you want to draw, you just go and study back. And then I want you guys to take note how market react when it come back as an activity. After that, first thing, market react, market respect lah. That means market come to back to the zone and it respect the zone and then make another move. Okay, this is the first thing. The second thing is market come back and break the zone, break the structure. Okay, I want you guys to take note these two things. I want you guys to write it down, the zone that it respect and the zone that it break. What are the difference? How price come back to the zone is, for example, when you draw something like this one, and you draw this one and then price come back. Yeah, then if the price come back and break like this, I want you guys to take note how this break happen. If you guys don't know how it break, never mind, you just want to take note. And then I want you guys to draw it on your chart from daily to H4 to H1, and then you can just share it with me lah. Yeah, you can just share it with me separately. And then if you see any question, if you have any question, then let me know, like how to draw the zone, how to draw the structure, everything. You just ask me lah. If you don't ask me, I don't know what you don't know, then I don't know how to teach you. Okay, it's a very simple activity. So this is almost a 30-minute class. that you guys have an activity to do. For those already trade before, you might think that, oh, this is so simple, but then why you still cannot be successful? Then that's the problem. Why this is so simple but you still fail? Okay, there might be something that you still don't know, and this is just a basic. We will go through more in-depth class after this one. Yeah, okay. So this is the activity that you guys might take a few days to do or something. Some people might be very busy, so I'll give you guys some time to just go through this one before we have another class. Okay, bye.